What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. So let's see what happened today in the market. It says the S&P 500 closes lower as Nvidia pulls down tech sector and Dow briefly touches record. So what happened today? Yeah, because there was a lot of red in the market. So it says the S&P 500 pulled back on Tuesday, weighed down by Nvidia shares and a broad decline in technology stocks. So the broad market S&P 500 lost 0.59%, while the Nasdaq fell 1.46%, and the Dow Jones Industrial average added 0.02%. So the 30 stock index touched a fresh record high during the session, powered by a pop in Home Depot. So shares of a mega cap tech and big name chip makers declined. Nvidia shares lost 3.5%, while advanced micro devices AMD and Broadcom slipped 5.4% and 3.6% respectively. So shares of high flying software stock Palantir dropped more than 9%, making it the S&P 500 worst performer. So other major tech related names such as Tesla, Meta, and Netflix were also under pressure. So the AI trade may not be breaking, but it could be catching its break or its breath after a 40% run for the Nasdaq since April. Historically, a pause is normal. So this is normal as the market recalibrates around the latest economic data and anticipated Fed policy, said Jay Bronchetti, Chief Investment Officer at Lincoln Financial. So it looks like some major investors pulled a lot of money out of the tech sector today. So as capital shifts towards companies across more sectors who demonstrate an ability to apply AI to boost margins and efficiency, potential rotation and wider participation may underpin a more durable advance through near-term chop is likely, Bronchetti added. So Home Depot shares rose 3% after the home improvement giant maintained its full-year outlook. To be sure, its second quarter earnings came in below expectations. Investors await earnings from Lowe's, Walmart, Target, due later this week for insight on how consumers is faring, how the consumer is faring amid a mixed inflation outlook and evolving U.S. trade policy. So Wall Street is also looking for clues from the Federal Reserve Chair Jerome Powell as to what will happen at the central bank's remaining policy meetings this year. Central bank officials from around the globe will convene this week in Jackson Hole, Wyoming, for the Fed's annual economic symposium. So the Fed funds futures market is indicating an 85% chance for a quarter point rate cut at the Fed's next policy meeting in September, according to the CME Fed Watch tool. So Friday's Jackson Hole speech is likely an inflection point for markets as we believe Jerome Powell will signal that rate cuts are likely at the upcoming September meeting, says Stephen Schwartz, founding partner of wealth management from Pioneer Financial. So valuations may have more room to expand as we move into the back half of 2025, as investors will at that time start to price in at 2026 earnings, which are expected to improve thanks to the potential for lower interest rates and improved tariff policy clarity, he added. And that is pretty much it for the stock market news today. And there were some big losses. My information technology ETF FTEC lost $3.97. That's a lot of money, closing out at $204.88. Nvidia lost $6.37 today, closing out at $175.64. Tesla lost $5.85 today, closing at $329.31. Palantir lost $16.28 today, closing out at $157.75. Broadcom lost $10.85 today, closing at $294.91. My S&P 500 ETF SPLG lost 42 cents today, closing out at $75.27. Meta lost $15.89 today, closing out at $751.48. Apple lost 33 cents today, closing out at $230.56. And that is it for today's stock market news, people. Some big losses today, but hey, that's what happens in the market. You know, you have your good days, your bad days, and you have good days and you have bad days. I mean, some days you're just in the middle, right? Yeah, today was just not a good day. I believe, like they said, tech stocks are up 40% since April. So investors took some money off the table, and now they're going to start pricing in the 2026 prices, hoping that the Feds will cut rates in September at the next meeting. Yeah. All right. So as always, hopefully you are investing. You're putting something into the market, but first you need to get out of debt, get out of personal loan debt, get out of car loan debt, get out of credit card debt, get out of student loan debt, get out of any forms of debt, because debt is holding you back. Debt does not give you full control over the money that you work so hard for. And the only way that you can get out of debt is by creating a plan. And that plan is called a budget. So you create a budget so you can start telling your money where to go, so you can stop trying to figure out where it all went. So telling your money where to go, you start attacking your debt. When you're attacking your debt and you're trying to get out of debt, stop all investments so you can put all your money towards your debt. You create that plan through that budget, start attacking your debt from lowest amount to largest, start that snowball effect, pay it off. And then once you're out of debt, then you can start investing 15% of your income back into your retirement. You create your kids' college fund, your 529 plan, you fund that. You create 3 to 6 months of living expenses for your emergency fund, for emergencies. And then you start tackling your home if you have a mortgage. If you don't have a mortgage, it's okay. You can continue to rent. If you would like to buy a house, make sure that that mortgage, or even if you're renting, make sure there's no more than 25% of your take-home pay. You buy that home, put down at least 20%, finance that home for 15 years instead of 30 years, so you can save on interest, because the banks are making double the amount of money for financing a home for 30 years. They're making the money off of the interest. That's how they make their money. The first couple of years of your mortgage, you're paying mostly interest. That's how the banks make money. So stop giving them all of your money. Finance your home, be responsible, be smart for 15 years. And then, because you have no debt, you have full control of your money, you have your budget in place, you have your emergency fund, your kids' college fund is fully stocked, you're investing at least 15% of your income into retirement, you more than likely pay that home off in 5 to 7 years. I did it in 27 months and 19 days. You can do it. I just kept attacking it. But yeah, you can do the same. So get out of debt, pay off your mortgage. Then once you pay off your mortgage, you have no bills. You do what you want to do. You have options. There's nothing like having options. Do whatever you want to do. When you're in control, you're no longer trading your time for money. It's up to you. You do what you want to do. All right, so I'm going to end this video. So like, comment, subscribe, share this video. Let me know what you think. If you think anything at all. So yeah. All right, you guys take care. Peace from Hawaii.